Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the details are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome back to the Deep Dive. Today is January 8th, 2026, and, well, the crypto market is certainly testing everyone's composure right now.
It really is.
We saw prices correct pretty sharply over the last 24 hours, and that's even after that, dramatic weekend run where Bitcoin briefly shot past the $92,000 mark.
Well, that was right after the news about Victor Maduro's arrest. It's just a classic sign of market volatility, I think, and maybe a bit of psychological overreaction.
It's a political catalyst.
Exactly. These events can create a powerful but temporary surge. You get a rush of liquidity, maybe a flight to safety. But that enthusiasm almost always gets corrected by, broader economic caution and people just taking profits.
And you can really see that caution in the raw numbers we're looking at today.
Right.
But I think amidst all this choppiness, there are three massive foundational shifts happening that are frankly much more important than the daily price swings. So our mission today is to cut through all that noise and really synthesize these major themes for you. First, we've got the U.S. landscape. It's finally establishing some crucial regulatory clarity through some pioneering stablecoin work.
And charter bids, which is huge.
Exactly.
Yeah.
Second, we're seeing this accelerating, just undeniable shift toward true self-custody payment solutions. I mean, major companies are doing this.
And finally, the explosion of real-world asset tokenization, RWA. We've got some fascinating, tangible case studies coming out of the Middle East.
In energy and agriculture, of all places.
These are the underlying structural changes that are going to define the future. So I guess let's start with the market's current mood. It's complicated.
It is. So let's look at this chaotic snapshot and try to interpret some of these mixed signals. If you're tracking the market sentiment index, we're definitely seeing caution. It's sitting at 43 right now.
It's just slightly negative. It's down from 49.
And the clearest evidence of that nervousness, I mean, look at the ETF outflows, a total of $584.4 million in just the last 24 hours. That's retail and short-term traders pulling profits. They're reducing exposure, plain and simple.
And that massive outflow certainly underscores the bearish momentum, in the immediate term. But the contradiction here is what's really illuminating.
What do you see?
Despite that pullback, the total crypto market cap is actually pretty resilient. It's still sitting above $3 trillion. In fact, it's up 2.1% in the 24 hours leading up to this.
So how do you square that?
Well, here's the key difference. Institutional demand hasn't paused. Digital asset treasury inflows actually picked up pace. They totaled $3.97 billion. So you have this duality.
Short-term panic on one side.
Exactly, versus continued long-term accumulation by corporations and institutional funds. It's a tale of two markets right now.
The dual signal fear and accumulation. That really is the core story. Okay, let's look at the plumbing, specifically DXs versus CXs.
Right, decentralized versus centralized.
Our 24-hour DX volume is at $13.12 billion, and that generated total fees of $69.7 million.
So to give you that real aha moment here, you need to compare apples to apples. If that same volume, $13.11 billion, was processed on traditional centralized exchanges, the fees would just balloon.
To what?
You'd be looking at a range of somewhere between $200 and $300 million.
Wow.
That staggering fee difference is why decentralized platforms aren't just some ideological alternative. They represent a fundamental monetary advantage. It's a massive cost reduction.
It really makes the switch seem inevitable, at least for a chunk of the volume. Speaking of which, DX dominance is currently a little below that 40% threshold. It's at 39.88%.
But let's look at who's winning right now. Bitcoin dominance is strong at 56.60%, and Ethereum is holding steady at 12.05%.
And that's a critical piece of data, right?
It is. It tells us that despite the common narrative that altcoins outperform during recoveries, well, that's just not happening right now. Capital is clearly flowing into the largest, most resilient assets.
A flight to quality, but within crypto itself.
You could call it that, a risk-off move. And the market caps reinforce this. Bitcoin at $1.80 trillion and Ethereum at $376 billion.
We also have to flag the stablecoin volumes. Analysts always see these as a leading indicator for, latent bullish pressure, and they are subdued.
They are very subdued. Tether's USDT volume is at $86.62 billion.
Why is that specific number so important?
Because dry powder is what fuels rallies. I mean, for us to sustain a new all-time high and feel genuinely confident about it, we would really want to see stablecoin volume, especially USDT, closer to maybe $150 billion.
Okay.
That level indicates there's enough liquidity just waiting on the sidelines. And right now, it's not there. USDC is at $11.71 billion, FDUSD at $3.65 billion. It's directly limiting the bullish upside.
Got it. The current BTC price is hovering around $90,196, so still up 4.52% over the last 7 days, which shows the longer-term trend is positive.
And in a bit of internal drama, Ripple, XRP, it just reclaimed the third spot by market cap.
But the real story connecting to our mission today is this rise of real-world asset coins. Fig HELOC is leading the pack at $14.87 billion.
Yeah.
Then you have Chainlink at $9.39 billion. This pivot to sovereign-backed assets is just fundamentally changing the risk profile.
And that leads us directly to the infrastructure layer. I mean, while many people focus on the RWA token itself, it's the plumbing that really matters. Chainlink's cross-chain interoperability protocol, or CCIP, it's not just a buzzword.
Okay, let's stop there, because this is what this deep dive is all about. Why is CCIP so critical for RWA adoption?
Well, the key bottleneck for RWA is trust. It's security, especially when you're moving information. RWA requires all this complex off-chain data, things like legal deeds, ownership records, audit results.
KYC data.
Right, all of that has to be standardized and then securely transmitted to the blockchain where the token actually lives. CCIP is what standardizes that transmission. It guarantees its security and its integrity across different chains.
So it's the bridge.
It is the secure, standardized communication bridge. Without it, RWA scaling is just impossible. It basically solves the trust me problem by embedding security right at the core.
And that security in the digital space has to be matched by legitimacy in the physical world.
Exactly. And we're seeing that legitimacy being built right now from the ground up, starting with state-level regulation in the U.S.
Which brings us to Wyoming and the debut of the Frontier Stablecoin, FRNT. This is a monumental moment. I mean, this is the first fully backed stablecoin issued by a U.S. public entity.
It's not a corporation. This is a sovereign entity. It's setting a precedent.
The structure itself seems so elegant. It's profound.
It is. FRNT is backed one-to-one by the U.S. dollar and short-term treasuries. It's why Kraken listed it almost immediately. But the real innovation is the fiscal mechanism. The interest generated from those backing assets, it's going to be used to fund state programs.
Like education.
Education, improving government settlement efficiency, reducing taxpayer reliance. It's brilliant.
But hold on. If the state is using the interest to fund education and cut costs, isn't that essentially creating a kind of crypto-backed municipal bond? What sort of regulatory conflicts does that create? And what are the risks?
That's a crucial question. So it's designed to be distinct from a bond because the state isn't technically issuing debt. They're just leveraging the interest from a managed asset pool.
I see.
And the key distinction is the regulatory clarity that Wyoming has already built into its charter system. Because FRNT is fully disclosed, it's audited, and it's specifically structured to hold low volatility U.S. government assets, the risk profile is dramatically lower than, say, previous private stablecoins that ran into trouble.
So it's the transparency and the sovereign guarantee that makes this template work.
Exactly. This really solidifies Wyoming's reputation as the laboratory for digital finance. It's providing a tangible, audited model that could seriously influence federal policy down the line.
Absolutely. And the second major regulatory push is coming from the private sector, but with a similar goal.
Right, integrating into the legacy system. World Liberty Financial Token has applied to become a national trust bank, overseen by the US OCC.
Okay, explain the significance of that, an OCC charter bid. What does that actually unlock for them and for their USD1 stablecoin?
Well, a national trust bank status is basically the gold standard for regulated financial infrastructure. Only one other digital asset company, Anchorage Digital, has actually achieved it.
So it's rare.
Very rare. If World Liberty is approved, they gain full legal authority to handle the issuance, custody, and conversion of their stablecoin with fully regulated settlement. This doesn't just make them a crypto firm, it makes them a chartered bank, operating under the strictest U.S. federal oversight.
It just integrates them directly into the traditional system.
Completely. And it removes the need for any intermediary banks in the settlement process.
So we're seeing the regulated digital dollar finding legitimacy. Now let's pivot to the other side of that coin, this revolutionary movement of people and companies demanding autonomy, the self-custody shift.
And this trend isn't being driven by some kind of protest. It's being driven by pure, undeniable operational superiority and cost reduction.
A perfect case study for that is Bitcoin Inc. They completely rebuilt their events, their payroll, and their corporate treasury operations using the open-source self-custodial BTCPay Server. What was the real impetus for that move?
Autonomy and speed. Bitcoin Inc. realized that by using BTC Pay, they could accept and send Bitcoin globally, making payments faster and cheaper, but crucially without having to rely on geopolitical stability or, bank operating hours.
And they tested it at scale.
At a massive scale.
Okay.
It successfully handled both on-chain and Lightning Network transactions during their large conferences.
And the treasury management part is fascinating. They're using the system for automated revenue conversion directly into Bitcoin for their long-term corporate treasury.
It's institutional-level self-custody. It just removes counterparty risk right off their balance sheet.
Precisely. And we're seeing a similar philosophy now fueling growth in the creator economy with the launch of the Rumble wallet.
Right, their new built-in self-custodial crypto wallet. It's a partnership with Tether.
This is a huge utility play. So how does this wallet fundamentally improve the experience for creators and their fans?
It lets creators and users hold and transfer crypto directly within the platform. So this facilitates instantaneous fan tipping and borderless payments without any of the traditional banking middlemen.
So a creator in one country can get micropayments from a fan in another. Instantly.
Instantly. The wallet facilitates that transaction using Bitcoin, USDT, and even Tether Gold. It eliminates platform processing fees and all those geographical restrictions. And the tech is powered by Tether's open-source wallet development kit, so it's scalable and accessible to millions right away.
So whether it's a major corporation handling payroll or a content creator accepting tips, the goal is exactly the same. Bypass the middleman, gain full autonomy, and just dramatically cut your costs.
If 2025 was all about spot ETFs and regulatory capture, then 2026's narrative is definitively focused on tokenization. And the Middle East is just rapidly cementing itself as the global hub for this.
Absolutely. The developments there really show tokenization moving out of the purely speculative world and into the core assets that, underpin global commerce.
Let's take the agricultural sector first. In Abu Dhabi's tech hub, Hub 71, there's a startup called Melexi Inc. They're launching Matex, the world's first agricultural asset token exchange, and it's built on the Avalanche blockchain.
So the tokens, they're called METHS. They represent actual legally owned agricultural assets.
Insured, audited, traceable, and legally owned, yes.
Okay, this sounds complex. We hear about 10 different embedded technologies involved. So for someone listening, what are those technologies actually doing to solve the real-world problem of supply chain instability in agriculture?
That's the depth we need. So the problem in global agriculture is, high failure rates and a total lack of transparency. Melexi integrates systems like Contract IQ, which uses smart contracts to guarantee the legal transfer of ownership and climate sense.
What does that do?
It uses Oracle data feeds to verify growing conditions and sustainability metrics for ESG compliance. By embedding verifiable, transparent data and guaranteed legal transfer right into the token, Melexi claims they have less than 1% supply failures.
And the industry average is what, 50%?
50%, 50%.
A 72% increase in buyer capital efficiency is a staggering claim. This isn't just a pilot project. This is a full-on supply chain overhaul.
And the innovation continues in the energy sector over in Saudi Arabia. We're seeing this high-level strategic partnership between EDF regional headquarters and Drop RWA.
And they specialize in sovereign RWA infrastructure. So what's the objective in one of the world's biggest energy producers?
The objective is to integrate decentralized technologies within the vast Saudi energy landscape. They are exploring tokenizing real-world energy assets, including new renewable installations, specifically to improve project liquidity.
How does that work?
Well, large infrastructure projects, like a new solar farm, they're typically illiquid for decades. Tokenization fractionalizes the ownership. It allows capital to flow in and out efficiently, which just modernizes the financial structure of these mega projects.
And the collaboration goes beyond just the physical assets, right?
It does. It includes developing frameworks for the carbon credit industry, and this aligns directly with Saudi Arabia's Vision 2030 for integrating cutting-edge financial tech. It shows a sovereign move to use blockchain not for speculation, but for national strategic goals.
This level of institutional adoption brings us right back to the macro landscape we started with, volatility and inflation. For the informed investor, I think the key question is still, how does the current U.S. economic climate truly affect the price of Bitcoin?
Yeah, we have to cut through the noise, especially around inflation and policy. Early last year, the media narrative was that trade tariffs would inevitably spike inflation. But historically, tariffs often have a counter-inflationary effect.
By protecting domestic industries.
Right, and reducing reliance on expensive imports, which helps stabilize internal prices. And that narrative has largely played out. Inflation has slowed.
And here's the counterintuitive correlation that I think should define how you track risk assets. We're consistently seeing that crypto prices tend to, they bump up when inflation goes down.
Which confirms that Bitcoin is not yet widely treated as a classic hedge against inflation, like gold.
So why is that? Why the inverse correlation?
The reason is crucial to understand. Bitcoin is still trading as a risk-on growth asset. So when inflation cools, the fear of aggressive monetary tightening by the Fed subsides. Less pressure to raise rates means greater market liquidity and a higher appetite for risk assets like tech stocks and, yes, Bitcoin.
So cooling inflation equals loosening financial conditions, which is what risk assets thrive on.
Exactly.
Okay, so understanding that dynamic, what does this all mean for your calendar? We have 2 key dates to watch very, very closely. The next CPI data release is scheduled for January 13th.
And when that data drops, you should focus specifically on the core inflation data. That's the one that strips out the volatile energy and food prices. It's what the Federal Reserve really focuses on.
And if core CPI surprises on the downside,
the market will immediately anticipate a softer Fed stance.
And right after that, we have the critical FOMC meeting at the end of January. This is where policy turns into action.
It is. If the Fed signals or actually implements a reduction in interest rates, it directly boosts Bitcoin's price by making traditional interest-bearing assets like savings accounts or treasury bills less attractive. It just naturally drives capital toward alternatives.
So what's the most actionable takeaway then?
It's simple. Track the crypto ETF inflows and outflows leading up to both the CPI release and that FOMC meeting. They are the most valuable real-time sentiment indicators we have for how big money is positioning itself based on these macro expectations.
So what if we solidified today? We navigated a really volatile market shakeout, but it seems like beneath the surface, the infrastructure of digital finance is being built faster than ever.
It really is.
Wyoming is setting a legitimate regulatory template for the digital dollar. The march of self-custody seems unstoppable, thanks to players like Bitcoin Inc. and Rumble.
And RWA tokenization is transforming massive global tangible sectors, from agriculture and Hub 71 to energy finance in Saudi Arabia. We've tracked the growing legitimacy and utility of the digital dollar and how it's being integrated into public and regulated finance worldwide.
Which leaves us with a provocative thought for you to mull over. If sovereign entities like Wyoming and massive energy corporations like EDF are now using stablecoins, the digital dollar, to fund public works, reduce settlement delays, and manage enormous energy projects, what happens when they achieve that same level of trust and operational comfort with the native autonomous digital asset, Bitcoin, for those very same tasks in the next 5 years?
Food for thought indeed. Thanks for joining us for the deep dive.
We'll catch you next time.